I just want to say welcome to all the new subscribers to the channel. We run an open door policy here. Anybody's welcome to come and tune in to YouTube for just a few minutes on just a financial piece about, you know, how you can deploy some really aggressive alternative strategies in your own lives to strengthen your financial future, guys. And trust me, these are alternative methods. There's not going to be a lot of people that you run into in passing. There's not going to be family members that you guys are going to be talking to that are doing self-directed investing. I feel like I'm actually defining the landscape, to be honest with you, because until I run into other people, especially from the United States, they've been doing it in Canada for quite some time, but in the United States, we all too often just want to stick our head in the sand, right, and end up with a financial planner to take our money over a 40-year life cycle and then wonder what happened when we're, you know, reflecting on our life and wondering why our nest egg isn't quite as big as we needed it to be. But welcome to all the new subscribers, guys. These are going to be some of the most core videos that I end up offering for you guys on how to take certain sets of dollars and deploy those into the stock market. And all too often, I find that a lot of different YouTube channels are offering the similar content with regard to how to invest $1,000, but we're focusing on the end result to start. And that, I believe, is the backwards way to approach. If we had $1,000, do we take a step back? And what's the strategic approach, right? We don't want to just go out and buy single stock allocation if you're a conservative investor, right? And vice versa. If you're a conservative investor, right, we need to align those assets within your account to be reflective of what you're going to be comfortable with over the long term. And I'm talking 10, 20, 30, 40, 50 years for some of my younger investors out there that are looking to sink their teeth into the correct way to invest. And trust me, guys, make no mistake about it. This is the correct way to invest in the stock market. It's the correct way because you are going to be provided all of the fruits of your labor, okay? You can do this with minimal to no fees, okay? Self-directed investing puts you at the helm and puts you in charge of your own money now and into the future. Welcome to the Independent Investor Channel, guys. We're filming from New York City. My name is Ryan. This is going to be how to invest $1,000, but it's going to be part of my three-part series on how to strategically approach the stock market if you're a beginning investor and you've got a little bit of savings and you've cleaned up some of the debt in your life, which are some of the precursors to actually stepping into the stock market carefully. So we always want to offer those precursors to make sure that you guys understand that you have to build up your opportunity, okay? Not everybody can invest. Investing is a luxury and it is indeed a privilege. It is a privilege, all right? It is something that I believe everybody can do, but you have to want to do it, and you have to move through those precursors of eliminating or getting debt under control and having a little bit of savings in your savings account before you end up entering into the stock market. And I understand that it's revolutionary for me to be saying, sit on a little bit of cash in your cash account, okay? Because if you go down and sit with a financial planner and you come in with 10,000 bucks, guys, they're going to want it all, okay? They're going to want it all right? I am not in that camp. Some of the worst mistakes that I have ever made in the stock market has becoming overexposed to the stock market and not keeping enough cash on hand. Why? Put quite simply, it's so I can sleep at night, all right? If I had $250,000 exposed to this stock market right now, or the $500,000 in assets that I actually have, all devoted to the stock market right now, I don't think I could handle that, okay? And I don't want to handle it, all right? So I choose not to, all right? But all too often I find that people, when they're looking to take their first $1,000, they're looking at the price of a stock, right? And they're looking at an AMD and it looks really, really attractive because it's $12, okay? And that's the only rationale that we use to approach the stock market. So guys, please enjoy. This is gonna be how to invest $1,000. It's gonna be how to invest $1,000 my way, all right? We are attempting to make some framework around our thought processes in how we deliberately approach the stock market, all right? And one of the precursors that I insist that you guys have is have the right account, all right? Now, the Robinhood discussion and the retirement account discussion, I've already addressed on previous videos, and you guys who have been tuning in for me a while, I believe that the #1 account that you need to start right away is your retirement account, all right? Start contributing toward that $5,500 cap. And for you guys who are just waking up to the prospect of investing and kind of noticing that the stock market right now is on fire, it's on fire. I mean, I turn it on in the morning to watch it and my TV starts to catch on fire. It's so freaking hot. I've never seen anything like this before. I'm not complaining. I'm making killer money. That's wonderful. I want you guys to put yourself in a position to enjoy some of the prospects of that. But before we do that, we have to understand that if we're going to grow assets, we are going to grow them in a self-directed Roth IRA account, all right? So it doesn't help me to sit there and recommend stock A, B, and C to you if we're not identifying the right account for you guys to invest in. I know a lot of you guys out there have Robinhood accounts. Come see me when it comes tax season and you're having to, you're going to have to claim all those trades that you're making in Robinhood, guys, okay? I trade in and out of stock in my Roth IRA account with no problem, and I do it free of charge. I'm trying to get you guys to that level. Anybody who's from $0 to $50,000 should be really in that passive to basic camp, where we're looking to grow assets up to that $50,000 mark so we can start to realize some of those trading benefits within that account, all right? The second thing that you need to do is you need to set goals. You really need to understand why in the hell you're even entering into the stock market. Why? If you're 52 years old, and I know there's a lot of people actually who are tuning into me. Why? Because I think you just have as much right as a 50-year-old or 60-year-old or 70-year-old to the stock market as somebody as they're 18. No doubt about it. You have just as much right. But my question for the 18-year-old and my question for the 52-year-old is going to be the same. It's going to be the same. What is your goal? What is your goal with the $1,000? What do you want to get out of it? Do you have assets saved aside and we're taking $1,000? Maybe we want to put it into a more risky portfolio if you're 52. And after we've assessed that we want to put that in an aggressive posture, maybe we do put that $1,000 in Alibaba, right? I just took a huge position in Alibaba this week. I'll be talking about it on the stocks that I bought for January. I don't do stocks I'm watching anymore. I do stocks that I'm buying. Why? Because I'm an active stock investor, and that's just what I do, all right? So when we're talking about setting goals, that's your opportunity before you've even devoted 1 red cent of this $1,000 to the stock market to set back and say, I want to take this $1,000 and I want to tax protect it like Ryan's talking about. I want to put into 2 aggressive stocks. I'm a 7 on the investment scale, right? So I'm an aggressive investor, and that's just what I want. And you will end up meeting your goals if you do that. Conversely, if you don't set that goal and you're 18 years old, right, and you've come to find out that you're a conservative investor and you've put all your money into a risky growth stock, right, and it adjusts back 50%, that's going to cut deep, okay? That's going to be a real eye-opener for you guys, all right? And the next thing you guys have to understand, I've broken down risk tolerance for you guys, and I'm going to be doing a full risk tolerance where I go through each and every number where I explain what a value of 0 means on the risk tolerance scale according to the independent investor channel, which is me, all right? I'm going to tell you what I think a 0 is and what I think a 3 is and what I think a 7 is and what I think a 10 is, okay? So we are going to break that down, but if you guys just play with me a little bit and kind of look to step back and run through the exercise to say, Ryan mentioned risk tolerance. What does that mean? All right. Imagine you're a midline 5. Could you imagine taking a stock into a 40% downturn? How would you feel about it, right? Run yourself through those scenarios. Are you putting the amount of capital forward to where if you lost 40%, you would have the fortitude to actually invest more? Guys, $1,000 in the stock market is really not that much. I'm going to preach to you a little bit from the philosophical perspective, all right? $1,000 in the stock market is really not that much, okay? It is a start, and I applaud your efforts for getting that $1,000 of investment capital saved. That's wonderful, but we are not going to take it and we're not going to overexpose it to risk, right? So we can generate this $1,000 and turn it into $10,000 overnight. We will not do that. okay? I am a value investor. That is why we are going to get every single penny's worth of extract out of this $1,000 by diversifying you right away, okay? That's why a model portfolio with $1,000 to start is going to be more ETF index fund driven, okay? More ETF, because I don't care so much that it doesn't roll the dividend back in for you. It actually pays you a cash dividend. And the game is to get you invested, to get you contributing, to get you being paid those dividends, to get you diversified to protect you, and get you up to that $50,000 as quickly as we can, right? There's videos that I have in my catalog where I talk about the steps and setting small short-term goals. Guys, if you're coming in with $1,000, your very first goal should be to get to that $5,000. That should be your very first goal, and you can get there on a funding schedule. To hell with the stock market. Don't even be reactive on the stock market, man. Be proactive and say, you know what? I'm going to fund this account. I'm going to start it with $1,000 baseline, and that's really all this is a figure. And as you guys grow and evolve with the channel, you guys are going to understand that your program is so much more of the focus than the dollars and cents in the account. It really is. It's going to be how much share accumulation can I get? Right? Ryan, I want to take $1,000 and I want to put it into the stock market. What's the maximum bang for my buck that I can get for this $1,000? All right? And that's why I have taken you guys and put you into one of three categories. It makes it simple for me. You're either conservative, basic, or aggressive. Now, if you've got your risk tolerance and you say, Ryan, I think I'm a 3. I want to start out as a conservative investor. You need to answer the next question. What age group are you? Okay? Boom, you're there. You're in the category. Once you've determined what risk class you are in, okay, let's say you're a 3 and you're a conservative investor. You want to start investing in the stock market, but you come to me and you say, Ryan, I don't like your passive idea of just entering into ETFs and just going to sleep on my portfolio. Remember, you can win with that in a self-directed account. And that is the method and the madness of my ways that I recommend for you guys. Because if I put you in a passive vehicle, I know that those are going to accelerate over time and grow. And that's fine. But if you guys come to me and you say, look, I'm a conservative investor, Ryan, but good grief, man, I'd like to get into some ETFs, but I'd like to start this account off with a couple of single stocks, right? Or maybe one single stock. My recommendation is going to be for you, and this is where we are going to get into the percentage of allocation. We are going to get into the percentage of allocation, and these are some of those terms that I throw out there for you guys so you can start speaking the language with me. You can start speaking the language and understand, okay, if I want to blend the portfolio together and I want to do a passive portfolio, or I want to do a stock portfolio, or I want to do a mixture of both, if you are in fact in the conservative camp, what we are going to do is we're going to put you 75% in the passive camp, and we're going to take 25% and put it into one single stock. Guys, this is $1,000, okay? I cannot take you and spread you too thin over the account, okay? I can't spread you so thin over the account that it'll never grow, right? We want to put our assets to work in the account in a way that it's going to grow for you over time, okay? So that's just my recommendation. My recommendation is to go full passive, 100%. Put it in the VOO S&P 500 index fund. And I talk to you guys all the time. You guys always want to tune into these how to invest $1,000 videos, and you always want to be given the end result right away. I want the end result. I want the end result. This YouTuber says to go into NVIDIA. I want to buy NVIDIA. This YouTuber wants to put me in AMD. I just want to buy AMD. And you don't want to go through the preliminary pre-checks that I talked about. This YouTuber over here has put me into GoPro. What do I do now? Guys, I can't tell you how many people have crawled to me and asked me what in the heck they do with their GoPro shares. It's as if the entire world tuned into YouTube and got the advice to go buy GoPro. I don't get it, right? So you're all crawling to me now. What do I do with it, man? It's in the toilet, right? And if you had just sat back initially and said, how do I want to enter the stock market? How do I want to take this $1,000 $1,000 or $5,000 or $10,000, no matter what it is, and approach the stock market in a correct and calculative manner, you would have been set up so much better, right? But when you're initially looking to start with your $1,000, okay, you need to put yourself into your categories and understand and sit back and say, Ryan talked about the passive investment option. What does that mean? The passive investment option means that you buy an ETF product that has a super low expense ratio. The VOO carries a 0.04 expense ratio, guys. It doesn't get any better than that. And I'm buying the entire S&P 500. If you're super conservative, I could actually buy a Dow Jones Industrial Blue Chip, but I don't think that's even quite as diversified as the VOO. I recommend getting into either one of two diversified ETF products, and that's either VOO or SPY. That's going to be the cornerstone. Guys, I'm not making this stuff up, man. I'm picking the best of the breed, the best of the breed. So you guys look at it and go, oh my God, there's 8,800 potential stocks out there that I can buy. I cover a few hundred, and the few I invest in, the top 30 that I invest in, I'm looking to invest in the best of the best, no doubt about it. I don't dabble on balance sheets and try to find accelerated earnings of 8%. I don't try to do any of that. I just try to find the best proven companies over time. Now, on the stock portfolio side of the house, if you say, Ryan, I'm a conservative investor with $1,000, okay, my age is, let's say, 20 years old, and I want to enter into the stock market, but I only want a single stock portfolio. That makes total sense for you too, guys. You're looking at a 40 or 50 year investment time horizon, right? So with that said, we can put you into, I would recommend 2 or maybe 3 if we stretch it, depending on the stocks that we buy, super conservative growth and income and value stocks within that particular portfolio. So what I mean by that is you could take a position in maybe a Pfizer, right? And maybe a Verizon, a China Mobile, and a Comcast, okay? We could do something like an AT&T, all right, and a Cisco. All right, I'm going to try to cover some diversification, but if you guys are going to go against my recommendation to go passive to start, you have to understand that instead of buying the entire S&P 500 index, you're allotting to go with single stock allocation instead. And instead of owning a piece of 500 companies in the S&P, you are now betting on 2 names, right? And that's so it's not really my recommended course of action for you guys to try to be stock pickers at the beginning of your investment career, all right? And I want to premise at the end of this video that the most important thing that you could possibly do with your investment life is get these assets, whatever that it is you choose. And once we get your risk tolerance aligned with your investing time horizon, your age, and the type of portfolio we want to build with you, we need to get the assets housed in the correct retirement account. Guys, if this is your first time tuning into the Independent Investor channel, subscribe to the channel. I'm going to be putting so much more content online during 2018 as we've actually just birthed the channel January 4th of 2018 with my new LLC, which is actually called Cornerstone Capital Solutions Company, and I'm so thrilled to do this for you guys. You know, when I initially started this channel, I invested in myself. That's what I did. And now as the channel is starting to grow and evolve, I'm actually investing in you guys. I've got an investment in the channel, and I'm carrying that investment through because I feel wholeheartedly in delivering this message to anybody out there who wants just a tidbit of alternative strategy and capital solution strategy for their own financial lives. Guys, investing $1,000 is a tricky subject, but this is going to be first of a series that I'm going to be coming out with to try to get you guys to understand my thought processes when I'm looking at the figure of $1,000. My thought processes are going to evolve and change as we step up the financial ladder, as we move to the $5,000, $10,000, $25,000, $100,000, $250,000, $500,000, and $1 million mark. I'm going to be coming out with videos to cover the entire spectrum, guys, because every single one of my subscribers come from a different place, and they're coming from a different set of needs. The trick is to identify what those needs are and to deliver on the goods. Guys, thank you again for tuning in, and good luck in your investment future.